Data to the gold prices, which have gained today after weak global manufacturing data rekindled hopes for more easing from the central banks to support the recovery. Gold prices are currently trading on your screens nearly 1% on the higher side in Europe right now. For more on the gold outlook, we are now joined by Johan Santer. He's Global COO of Superfund in Hong Kong. John, hi, welcome to the show. How have you read the gold movement in the month of June, the jump up after the EU summit announcement?
We actually have not been surprised so much about the 3% gain in this short period of time. If you compare it, for example, to the Dow Jones that moved also 3%, S&P 500 4%, DAX 5%, and crude oil even moved 8% in this short period of time due to the confidence that was briefly provided by the European government to rescue the situation.
John, the view on the gold prices this year really have been divided. I mean, some people are talking about 1,400, while others say that this could be a 12th straight year of gains. There have been talks about $2,000 an ounce as well. What's your own sense?
Having said the 11th year, it only refers to the US dollar terms, because if you look, for example, gold up in a different currency, such as Australian dollar, Canadian dollar, and Swiss francs, there have already been 2 negative years, and in most other major currencies, at least one. So I think it wouldn't come as a surprise if there would be a negative US dollar gold term year at one point of time due to the strength temporary in the US dollar. But in the long run, we expect gold to increase much further.
Yeah, and your point is well taken. Yes, it's in the Indian rupees that gold has given positive returns for last 11 years. But the kind of buying that central banks and ETF investment has seen in the past quarter has been strong. Can't say the same about the physical demand, especially in Asia or rather India.
The demand is much more from central banks, which is definitely fascinating news for the gold price in this particular period. If you look into India, we are not so surprised about this scenario as well. Always when the rupee is depreciating, US dollar investments are coming more and more expensive. It's similar, I'm a lot in Japan. If I have to buy with my euros, Japanese goods at this moment, it's very expensive and a little bit unattractive. In the long run, Indians will buy gold. I don't see there any change on this behavior coming out.
So looking at all of that really, John, how much of percentage of portfolio would you recommend somebody putting in gold and why?
Generally speaking, we strongly recommend all asset managers or all money managers and clients to have a core portion in gold that could be around 15 to 20%. Coming back to the owner of our company, who has been a gold bull since the early 2000s, he has a very simple portfolio where 1/3 is linked in gold, another third is in systematic managed funds, which are our own, and another third would be in agricultural land. But again, every portfolio goal might look different, so it's very difficult to have just a figure for everybody.
15 to 20% nevertheless. John, final question really, and should gold be seen in light of demand and supply, because we mostly see it as a plain wealth or a safe haven commodity. At this point in time, it's expecting QE3, and that's the reason you've seen 1600 breach today.
When it comes to wealth storage, we have seen that gold definitely is the only commodity out there that can really stick up with that promise. And even though, if you remember back in 2008, where most of the commodities have been dumped in the second half of the year, and most commodities dropped like 40 or even 50% from their all-time highs during that time, gold still managed a modest 4 or 5% gain in US dollar terms for the whole year period. And I think that's a good signal that there is wealth storage in there.
All right, Johan, many thanks for joining us. So that's the view coming in for Superfund. They expect the gold prices to hold on, and yes, you might be looking at further buying, especially physical also pick up at these levels. Let's check about the crude prices then, and the Brent crude prices have moved higher, inching closer to that $100 per barrel mark, again on hopes of further stimulus by the central banks. But the Iran spat and the strike in Norway has kept the gains in check, and we have seen good gains coming in, 2.5% of a gain coming in for the Brent and the NYMEX crude prices. Let's go across then to Sugandha Sachdev. She's in charge metals, energy and currency research, Earlier Commodities in Delhi. And in Mumbai, we are joined by Vijay Bambani. He's author and CEO, BSPLindia.com. Vijay, let me start with you, and let's start really with the crude prices first and the kind of gain we've seen yet again today. How are you looking at it on the charts?
Manisha, chartically speaking, crude is appearing to break out above a congestion level. And should it really stay above the 4700 levels on the MCX, I think there could be a mild bear squeeze which could take prices higher. Now, I would be inclined to buy crude as long as it stays above the 4,700 levels with the stop loss at 4,665. That's a pretty tight stop here. And my primary target would be 4,750 with the possibility of 4,800 or maybe even 4,820 not being ruled out. I would start out with a lower exposure and probably build exposure as I go higher in prices, because that's where I think the possibility of a bear squeeze actually accelerates.
Sugandha, coming to you on crude itself, and on Friday we saw 8 to 9% of gains. Yesterday, of course, was a slightly dull day, 1% or more of gains, and today yet again 2.5% of a rise. How would you want to trade onto this one?
Our 3G.
All right, we seem to have lost Sugandha there for a few minutes. But Vijay, coming back to you onto that one, the kind of run-up that has been seen, does it look overbought for the very near term? 9% of a rise on Friday and then yet again nearly 3% of gains coming in today.
I don't think you could call it really absolutely overbought, but the kind of declines that you saw in the last couple of weeks would warranty such a move, because every action has an equal reaction. So the kind of sales that you saw are now being reversed, and as I said, I use the word mild bear squeeze. This is just a mild bear squeeze, and this is how technicals of the market really behave. So I would not really be surprised to see the price move up another couple of percentage points.
Vijay, coming on to gold then, and after facing resistance at 1600 for the longest of time, today we seem to have taken it quite easily, 1% and more of gains coming in right now. Are you looking at further rise?
I would say yes, because I've always maintained that this is an election year. The U.S. elections will see the prices of gold somewhat range-bound, and only after the U.S. elections are done and over with will you see a rally in gold. Now, whether that happens in the fag end of the calendar year 2012 or whether it takes a change in the year to 2013 before a larger move can be seen remains basically to be watched out for. But I remain a bull on bullion, and I think as long as the 29,100 levels on the MCX are not violated, I think even the short-term trend is not vitiated. So the trend remains largely up, and I would feel a lot more comfortable buying physical on declines rather than play the futures till the elections are out in the US.
Sugandha, let's get you back on precious metals now, and gold and silver both seem to be trading quite positive, 1600 holding and quite strongly on gold. How would you want to trade them?
Even I'm positive on gold prices having been supported by there's a lot of uncertainty in markets regarding the Eurozone crisis, and also the macroeconomic data is quite weak at the moment, which is likely to appeal for investment purposes. So also we are seeing physical buying coming in India at these lower levels because of rupee appreciation, so prices have slumped in Indian markets. So this is likely to support prices from India also, along with the fact that there is likely to be expectations of further monetary easing by Fed after the weak manufacturing data from US, which slumped to its 3-year lows. So I'm expecting prices to upsurge from current levels also, being supported by the level of 1550 an ounce in international markets. And in MCX, we are seeing a strong support emerging at 29,500 levels. So for the day also, I was expecting levels of around 29,750. And one is advised to keep a stop loss at 29,400 mark.
Sure. Sugandha, we were also discussing crude before we lost you there, and the prices have run up quite strongly. What's your sense, your strategy for that?
Even I'm positive on crude oil prices for the day. I'm expecting a strong base building formation at levels of around $78 per barrel in NYMEX, which is likely to lead to a wave of buying in the market. But on the higher side, I'm seeing a strong resistance emerging at $87. That would commensurate with the level of around 47.80 in MCX. But yes, the expectations of monetary easing by China and a rate cut by ECB this week itself, this is likely to support prices going forward. Also, there are tensions in Iran and a strike in Norway, which is likely to support prices. So for the day also, I would advise traders to go for a buy at dips of levels of around 46.50 to 46.70 and keeping a stop of 46.20. And one can eye levels of around 47.50 on the higher side.
Sugandha, what's your sense on the base metal prices? Because on one side it's the QE3, on the other side markets are expecting a CRR cut coming in from China. That really seems to be supportive as of now.
Yeah, moreover, there is a rebound in euro also from lower levels, which is likely to continue for some more time, which is also going to support prices and expectations of monetary easing. So in copper also, I'm expecting a very strong base at $7,200 in LME, and I'm expecting a kind of big move in copper prices from current levels. One can go for buying at levels of around 428, keeping a stop of 425.50 on the lower side, and one can look for targets of around 433 in the intraday session. And talking about the overall scenario also, I'm expecting levels of around 441 to 445 in coming days.
Vijay, what's your sense on nickel? Does it look positive for the day today?
I think so, yes, Manisha. We've seen strength coming in on this counter, and previously we've seen nickel outperform its peers by a good margin. I'm expecting this performance to come back, but for now I would test the waters and get my toes wet by buying the nickel mini futures in the July series at the 940 levels. I would hold these longs with a stop loss at 935, and I would expect to book profits first at 946. And should the price go up above 950, I might just enhance my exposure by going into the regular lots.